Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Acknowledgement. First and foremost, we would like to praise and thank to Allah Subhanahu wa Taala for giving us the strength, and because of His blessing, Alhamdulillah, we finally managed to accomplish this assignment. Without His blessing, we would not have gone this far. We would like to express our appreciation to all the persons that related during we perform this task. Therefore, we would like to express the highest thank you to our respected lecturer, Professor Madya Dr. Amirul Afif bin Muhammad, for guiding and advising us to complete this task. Without his guide, our assignment cannot be done properly like this. He always gives us support and guide on how to do our assignment in purpose to produce a good outcome. He inspires us greatly to work in this project. This assignment also cannot complete without ideas, suggestion, effort and cooperation from our group members, which are consist of Nora Mazwin, Muhammad Hafiz, Zulkifli Juso, Muhammad Shabirin and myself, Khairul Effendi. We always work hard to produce a good assignment with our full commitment and responsibility. Finally, we would like to express our thankfulness to University Technology Mara, Campus Shah Alam, for giving us opportunity to conduct this case study assignment. We also would like to express our sincere gratitude to our family, especially to our parents, who always provide moral support and never tired of giving positive word. Thank you very much.
There are 4 companies that we have chosen and involved in the real estate and property development sector in Malaysia. The first one is MK Land Holdings Berhad, which is a Malaysian property development company engaged in residential, commercial and industrial projects. Second is SP Setia Berhad, specialized in property development, creating residential, commercial and industrial projects with a focus on well-designed communities. The third one is Sun Surya Berhad, which is engaged in property development with a focus on creating sustainable and integrated developments, including residential and commercial projects. Fourth is Masing Group Berhad, a diversified property developer involved in various real estate segments, including residential, commercial and industrial properties. And the last one is IOI Properties Group Berhad, which is engaged in property development, including residential, commercial and leisure properties with a commitment to sustainable and innovation. This is the 8 financial ratio. The first one is current ratio. Current ratio is a financial metric that measures a company ability to cover its short-term liabilities with its short-term assets. It's calculated by dividing current assets by current liabilities. A ratio above 1 indicates a company can meet its short-term obligation. Next is net working capital, is the difference between a company's current asset and current liabilities. It represents the amount of capital available for the day-to-day operations of a business. A positive net working capital suggests liquidity, while a negative value may indicate potential liquidity issues. The fixed assets turnover ratio measures how efficiently a company utilizes its fixed assets, property, plant, equipment to generate sales. It's calculated by dividing net sales by average fixed assets. A higher ratio implies better utilization of fixed assets to generate revenue. Next is total asset turnover. Is a financial metric that evaluates a company's efficiency in generating sales from its total assets, calculated by dividing net sales by average total assets. A higher total assets turnover ratio indicates effective assets utilization to generate revenue. Next is the debt ratio. It is also known as the debt to assets ratio. Measure the proportion of a company's asset financed by debt. It's calculated by dividing total debt by total assets. A higher debt ratio suggests a higher level of financial leverage, indicating that a significant portion of assets is funded by debt. The debt to equity. The debt to equity ratio is a financial metric that assesses the relative proportion of debt and equity a company uses to finance its assets. It's calculated by dividing total debt by shareholders' equity. A higher debt to equity ratio indicates a higher reliance on debt for financing, which can imply greater financial risk. Next is the gross profit margin. It is a profitability ratio that measures the percentage of revenue that exceeds the cost of goods sold. It is calculated by dividing gross profit revenue minus COGS by revenue and multiplying by 100 to get a percentage. A higher gross profit margin indicates a more profitable business model after accounting for the direct cost of production. The net profit margin. It is a profitability ratio that assesses the percentage of profit a company earns from its total revenue. It is calculated by dividing net profit after all expenses, including taxes and interest, by revenue and multiplying by 100 to express it as a percentage. A higher net profit margin signifies a more efficient and profitable operation. As we can see from the chart, over the years 2019 to 2021, Marsin Group consistently demonstrated the highest cover ratio among the mentioned companies, reaching its peak at 477.70 in 2021. On the other hand, SP Setia Berhad consistently had the lowest cover ratio, hitting its lowest point at 1.19 in 2021. The cover ratio is a crucial metric for assessing a company's short-term liquidity, and these variations suggest differing levels of financial health and ability to meet short-term obligation among the companies.
Second ratio is net working capital. The purpose of net working capital is to find the higher positive value to suggest that fund is liquid and able to pay its short-term obligation. Analyzing the trend across this company that we selected, which is from the property sector, we observe that variation in their financial position throughout the year. MKLand Holding, Sansura and IPG generally show an increase in trend, while SP Setia experienced a significant increase from 2019 until 2021. On the other hand, Marsin Group saw a decrease in net working capital from 2019 to 2021. Analysis such as conducting a detailed financial performance assessment will provide a more comprehensive understanding of each company financial health, change in the company liquidity, operational efficiency and financial management. The third ratio is fixed assets turnover. The purpose of fixed asset turnover is to find the higher ratio reflecting the effectiveness of fixed asset to generate sale. My selected company, which is MKLN Holding, has maintained a relatively high and consistent ratio, indicating efficient use of fixed asset to generate income. In other hand, SB Setia has having a very low ratio, suggesting a challenge in generating revenue commensurate with its fixed asset base. Sansura experienced significant volatility with a significant decline in 2020 and subsequent increase in 2021. IOIPG and Marsin Group have relatively low fixed asset turnover ratio, indicating the needs to further examination on their asset management efficiency. Analysis and comparison with industry benchmark can help to identify areas for improvement. Stakeholders should also consider the ratio along with other financial metrics to gain a comprehensive understanding of each company's financial performance and operational efficiency. Thank you.
The debt ratio objective is to aid in the evolution of company financial structure by displaying the proportion of its assets that are financed by debt. The high debt ratio shows a greater dependence on borrowed funds, while a low ratio indicated a more prudent approach to the finance. According to the graphic, SP Stable Heart and Marsin Group have a ratio that grows every 3 years, indicating that these two firms really on debt to fund their asset. MK Land Holding, Sansura and IOIPG, on the other hand, have ratio that rise and fall but remain under control. The debt ratio study is part of a larger examination of the firm liquidity and solvency. Company with high debt ratio may experience liquidity issue if they are unable to produce sufficient cash flow to pay their debt commitment. Debt ratio can also indicate a company financial health, reliance on debt funding and associated hazard. It's useful tool for investor, creditor and financial analysis to use when deciding on a company financial. The purpose of debt to equity is to learn about the company financing mix, which reveal the amount of debt vs equity in the company capital structure. A high ratio suggests a larger reliance on debt, while a low ratio shows a greater reliance on equity. According to the provided chart, SP Setia Berhad and Marsin Group have a high ratio that is increasing year after year, while MK Land Holding, Sansura and IOIPG have fluctuating ratio. This might be due to a variety of variables. Ratio analysis is a helpful tool for cooperation in strategic planning. It assists management in making educated decisions on the best debt equity mix depending on the company risk tolerance, growth objective and market circumstances. Simply expressed, the debt to equity ratio is a flexible financial indicator that gives useful information about a company financial structure, risk profile, and attractiveness as a investment or credit risk. It's a key decision-making tool for financial analysis investor and creditor.
Gross profit margin. Gross profit margin is the ratio of gross profit to sales revenue, which show how much a company earn after paying for product cost. A high gross profit margin mean more efficiency and profitability, while a low one mean high production cost or low sales. Some noteworthy patterns are seen when the gross profit margin for the 3-year period are analysis for SP Setia Berhad, Mahsin Group, Sansuria Berhad, MK Lang Holding Berhad, and IOIPG. Mahsin Group and SP Setia Berhad have the higher and constant gross profit margin of 100%, which is rare and implies no production cost or other income source. Samsuria Berhad also has very high gross profit margin, but they vary over time. MK Land Holding Berhad has improved its gross profit margin from 20.09% to 34.91%, while IOIPG has experienced largest fluctuation from 10.00% to 69.00% to 25.00%. This volatility is attributed to variance sale revenue or cost of goods sold, which also highlight a lack of consistency and super operational performance. Assalamualaikum warahmatullahi wabarakatuh. My name is Zulkifli bin Yusof. My ID number 2021643202. Total asset turnover. Okay. Total asset turnover is an efficiency ratio that measures how well a company use its asset to generate sale. A higher ratio means more sale per ringgit of asset, while a low ratio means less sale per ringgit of asset. Distinct trend emerged when the entire asset turnover for Sansuria Berhad, SP Setia Berhad, Mahsin Group, MK Land Holding Berhad, and IOIPG is examined over a 3-year period. Although Sansuria Berhad has the largest total asset turnover, its sale efficiency is dimension relative to its asset, as seen by a downward trend from 0.49 in 2019 and 0.21 in 2021. SP Setia Berhad consistently demonstrated efficiency in coordinating sale and asset chain, as seen by its steady total asset turnover of 0.02. The Mahsin Group total asset level of asset utilization
Assalamualaikum warahmatullahi wabarakatuh, Doctor. My name is Muhammad Syafirin bin Abdul Halim. Student ID 2021639396. Net profit margin, a crucial financial indicator that evaluates the profitability of a company by contrasting net profit with sales revenue. It shows the portion of revenue that is kept after all costs are subtracted. The ratio of net profit of sale revenue or net profit margin indicates how much money a business makes after all costs are covered. Although it's a drop from 138.61% to 62.65%, Sansuria Berhad still have the largest net profit margin according to the disclosures. SP Siti Berhad net profit margin is 100%, which is impressive, but it eventually falls to 35.0%. Masing Group net profit margin rises to 86.78% from a merged 26.00%. The net profit margin of MKLens Holding Berhad start off low at 16.36%, then rises to 59.0% before falling to the 28.63%. At 10.80% IYPG net profit margin is rather low. Nevertheless, it climbed to 60% and then dropped to 21%. The statement suggests that these differences reflect the profitability and cost efficiency of the companies. In summary, the financials analysis of SP Siti Berhad, Masting Group, Sansuria Berhad, MKLens Holdings Berhad, and IOIPG provides a nuanced understanding of their distinct financial positions. Masting Group consistently exhibits a robust financial standing, as evidenced by its consistently high current ratio, indicating strong liquidity. Additionally, MK Lens Holding Berhad show an encouraging trend with an improving net working capital, highlighting enhanced operational efficiency. Each company displays unique financial dynamics, and the assessment of their comparative strength depends on specific criteria and objective. Evaluating their performance based on liquidity, operationally efficiency, and financial stability positions Mustang Group as a notable performer. The company's sustained high current ratios and improving net working capital underscore its resilience and effective financial management. While Mustang Group stands out across various financial metrics, investors and stakeholders should conduct thorough due diligence, considering industry's benchmark, strategic goals, and risk tolerance. A comprehensive understanding of each company's financial landscape is crucial for making informed investment decisions in the dynamic market environment. Diversifications and prudent assessment of the investment landscape remain fundamental principles for sound investment strategies. Muhammad Shabrin bin Abdul Halim from Masjid Nabawi, Madinah, Saudi Arabia.